Hello, in today's video we're going to be taking a look at 5 charts of major stocks and ETFs, and we're going to be utilizing the Day Trading GPS Stocks ETFs Daily Key Levels V3.0 indicator. This is the newest version of this indicator, which was just released last Friday, March 20th, 2026. So in today's video we'll be taking a look at some very popular large cap stocks and ETFs, specifically the SPY ETF, the QQQ ETF, and then we'll also look at 3 large tech stocks, NVIDIA, Tesla, and AMD. Okay, so first off, this indicator was just released a few days ago on Friday, March 20th, 2026. This V3.0 version of this indicator has a lot of major upgrades and additional new features, and mirrors all the features found in our SPX Daily Key Levels V3.0 indicator, which has been featured on this channel for the last few months. The Stocks ETFs Daily Key Levels V3.0 indicator, however, has some additional features that are specific to stocks and ETFs. This indicator works on all stocks and ETFs that are listed on the 4 major U.S. stock exchanges. Those are NASDAQ, NYSE, OTC, and Amex. It works on penny stocks, microcap stocks, small cap stocks, mid cap, large cap, and mega cap stocks, as well as all varieties of ETFs, including the most popular ETFs being SPY, QQQ, and IWM. Now in today's video is going to be a condensed video. We're going to run through the 5 different charts that we're going to be looking at: SPY, QQQ, NVIDIA, AMD, and Tesla. We're going to briefly go over some of the aspects of this indicator, but I would invite you, if you have an interest in finding out more about this indicator, all the features that it has included, and would like to get a general overview and more details about the indicator in general, to look in the description of this video, and you'll see a link to our video that we put out a few days ago, which was the full features and setup video for this indicator. It's a fairly long video, but if you look in if you click on that link and look in the description of that video, you'll see that it is broken up by chapters, so you can simply go to which chapters you would like to look at. You don't have to watch the whole video. You can just go chapter by chapter to specific topics and look at specific areas if that works better for you. Okay, so as you can see here on this screen, we have the market scenario analysis table for today's session that this is being recorded for, which is Friday, March 20th, 2026. So as you can see here, the market scenario analysis table gives you which market scenario that this particular symbol is in for this particular session, and then it gives you the applicable contextual levels that apply to this market scenario, which are yesterday's daily high, which is the previous day's RTH session high, the YDL level, which is yesterday's low, which is the previous day's RTH session low, the PMH, which is the current session pre-market high, and the pre-market low, which is the current session's pre-market low. It also gives you an explanation of what this market scenario is, as well as tendencies, key trading characteristics, what to look out for, what sort of scenario that this type of market structure typically entails, and also some other relevant information about trading this particular market scenario. There are only 6 different market scenarios that a market can open up in on any given session. So at the 9:30 a.m. market open at 9:30 a.m. Eastern New York time, the Stocks ETFs Daily Key Levels Indicator will classify the session at the first tick of the 9:30 open, giving you the market scenario for today's session, both here in this table up here for these contextual levels, as well as if you turn on the optional market scenario analysis table, it will give you more detailed information on this table. We also supply, in addition to our PDF manual user guide on how to use all the features of this indicator and how to trade with it. We also include a link to PDF one-page cheat sheets for each of the market scenarios that if you would prefer not to have the market scenario analysis table on your chart, you can simply refer to those PDFs and put them either up on a second monitor, or you can simply download them and print them out and study them in off-screen time. Okay, so this indicator at 9:30 a.m. market open New York time will give you the auto-updated daily key levels for today's session for the symbol that you're on. So the main key levels with this indicator are the bull bear KPL, which stands for key price level, and also the R1 levels above the bull bear KPL and the S1 levels below. Now, this particular indicator differs from the SPX indicator in that it goes all the way up to R10 and all the way down to S10 as far as key support and resistance levels for any given stock and ETF. For most of your large cap ETFs and large cap stocks, you'll primarily want to deal with just the default levels, which, as you can see here in this table, are R1 through R6 and S1 through S6, and of course the bull bear key price level. The indicator will also give you the 5 contextual levels for today's session, those being the PMH pre-market high, the PML, the pre-market low, yesterday's daily low for the RTH session, yesterday's daily close for the RTH session, and yesterday's daily high for the previous day's RTH session. You'll also see midpoint levels and these QL levels. The midpoint levels and the QL levels serve a couple different purposes. The QL levels are for taking or for tight stop losses either above or below each main key level. As you can see here, only the QL above the BBKPL and the QL below the BBKPL are turned on by default, but you can simply go in the user control panel and turn those on above any main key level or below any main key level if you prefer to take a tight stop loss on a bullish or bearish trade off of one of these R levels or one of these S levels. As far as standard stop losses, the standard stop loss is on a trade, bullish or bearish trade from any main key level. For the R and S levels, it's going to be on bearish trades, the midpoint above the level you're taking the bearish trade from, and the midpoint below on bullish trades that you're taking the level that you're taking the trade from. So for example, if you were taking a bearish trade on R1 and wanted to use the standard stop loss, it will be the first midpoint level above. If instead you were taking a bullish trade, then it's the first midpoint level below. And it works the same on all the other R and S levels as well as the bull bear key price level. If you're taking a bearish trade from the bull bear key price level, then the standard stop loss is the midpoint above. If you're taking a bullish trade from this level, then it is the midpoint below. And of course, as we stated, the QL levels are also available in the user control panel to turn on if you prefer to use tight stop losses on any bullish or bearish trade from the bull bear KPL or any of the R or S levels. As far as taking bullish or bearish trades from one of these 5 contextual levels, that is done through the user control panel, where you can select either a tight stop loss or a standard stop loss for either a bullish or bearish trade off of any one of these 5 contextual levels. And then there is also a reward risk multiplier that you can dial in, the reward risk multiplier that you would like to utilize for that particular trade. As far as reward risk on the other main key levels trades, we'll demonstrate today how that is done. It's very similar to the SPX daily key levels indicator in which you're using a combination of main key levels and midpoint levels for different thresholds for bullish and bearish trades. And then there's two different types of trades that you can take, either scalp only trades or regular trades. And we'll explain exactly the differences between the two and how those two different types of trades are treated with this particular indicator. We're also going to be discussing using additional free indicators for confirming your bullish or bearish trade off of any main key level with this indicator. So we'll also be going over that as well. And we will also be talking about uh, how to scale out of trades, specifically on regular trades, if you're trading multiple contracts and you would like to lock in profits and scale out of the remaining runners, either options or shares in the case of stocks and ETFs, since you can trade either shares or options if it does have options available. Okay, so let's just go ahead and start going in on one of the charts here. The first chart we'll be looking at is the SPY. So this is the ETF for the S&P 500, and it's one of the more popular day trading vehicles for both shares for people with larger accounts or primarily most people that are day trading SPY day trade options. So with SPY, you have options that are 0 DTE options available, since SPY does have options with expiration dates every day. So with this indicator, you primarily are using it for day trading. That means that you're going to be opening and closing positions all in the same session. You're not going to be holding sessions overnight into the next session. This indicator is specifically for day trading. All right, so first off here we have this 9:30 a.m. opening candle BBKPL alert. So this is a special alert in this indicator, which is specifically for the opening candle for the chart time frame that you have your indicator on. As you can see, we have it on the 2-minute chart time frame. That is the same time frame that we use for when we're having our videos on SPX on this channel. If you've seen some of those videos, we recommend the 2-minute chart time frame for executing the daily key level strategy that we'll be outlining today. You can also use this indicator for a different strategy than the daily key level strategy that we show. So the daily key level strategy that we utilize with this indicator is simply buying calls if you're trading options on bullish plays and buying puts on bearish plays. However, you can use all these key levels for other types of option strategies that are some of the more popular option strategies that people use with either 0 DTE or 1 DTE options for day trading stocks and ETFs. So keep that in mind if you are using some other type of strategy that you prefer, whether that is credit spreads, debit spreads, butterflies, iron condors, straddles or strangles, or any other type of popular day trading strategy that utilizes some sort of combination of options, then this indicator can also be very useful for those types of strategies as well. We don't go over those strategies on our channel because we mainly focus on our daily key level strategy, which is simply buying call options if we're utilizing options on bullish plays and then buying puts on bearish plays. But you can certainly utilize this indicator for other types of option strategies, because the most important thing about this indicator is the market scenario analysis that it will give you on every day automatically at the 9:30 a.m. open, as well as all of the key levels. So the market structure and the auto updated key levels are what is of great value with this particular indicator. So that transcends to really any type of option trading strategy. Okay, so as you can see here, we have this 9:30 a.m. BBKPL bearish alert here. This is a special 9:30 a.m. opening candle alert only. This indicator has a comprehensive alerts system, which has close above, cross and close above, and cross and close below alerts for all the main key levels as well as all 5 contextual levels. However, in addition to that, it also has a singular alert for the 9:30 a.m. candle, opening candle on the 9:30 a.m. open. And then that candle close will be for whatever chart time frame you have the indicator set to. Now with this indicator, because it does work on thousands of different stocks and different ETFs that are all listed on those 4 exchanges that we mentioned earlier, you're going to have to be flexible as far as the chart time frames that you're going to use, and that is going to depend on the liquidity of the particular stock or ETF that you're trading. Because unlike the SPX indicator where we have a high liquidity symbol such as SPX, where we're normally utilizing somewhere between 1 minute and 5 minute on the daily key level strategy, with the recommended time frame being the 2-minute chart. However, since there are so many different types of stocks and ETFs, then that is not going to be the case where there's going to be one particular singular time frame that's universally going to work the same on every stock and every ETF, because you do have penny stocks, you do have micro cap stocks, small cap, mid cap, large cap, mega cap. They all have different liquidity. If you're trying to trade something that is a highly fragmented, say penny stock or micro cap stock, that normally, unless it happens to be in the news with some major news event, normally does not have a ton of volume and normally does not have very high liquidity, then you're going to have to look more towards a longer chart time frame for something like that, normally, unless it happens to be in the news and has enormous uh, volume on that particular day. So on something like that on a normal day where it's just more of a fragmented, lower liquidity type of symbol, then you may need to look more towards starting at least at the 5-minute and then maybe looking at a 10 or 15-minute chart on symbols such as that are not that liquid. However, for small cap and micro cap stocks that are in the news, such as your daily gap up and daily gap down, major gap up and gap down list that you'll see on pre-market most actives, or you'll see on pre-market gap up and gap downs, where they have extremely high relative volume, and the volume on that day is um, very much higher than normal. Then on those types of stocks, even though generally they are illiquid most of the time, on those days, then they could become a lot more liquid because of the enormous volume and the news happening surrounding it. And then you can look at a lower time frame going all the way down to the 1-minute time frame when you have an event like that occurs. On your larger cap stocks and your larger cap ETFs, such as SPY, QQQ, IWM, Apple, Tesla, NVIDIA, Netflix, Meta, AMD, etc., then on those types of symbols, then again, that would be much like using the SPX indicator, where you could look at using the 1-minute time frame up to the 5-minute time frame, depending on your preference. And again, in today's video, we're going to be mirroring what we use for SPX, because we're using basically the same vehicle, SPY, that is just in the form of a ETF as opposed to just the SPX cash index. All right, so again, you can see that we have this ribbon indicator also in the chart that we're utilizing to help confirm entries or to avoid entries where we're getting conflicting signals. So the ribbon indicator, this Annie's ribbon that you see here, is a ribbon indicator that is available for free on TradingView, and there will be a link in the description of this video where you can check this indicator out, and there will also be an additional link in which Annie also goes over how to utilize this particular indicator as well. This ribbon indicator, Annie's ribbon, is very similar to the Madrid ribbon, which is one of the original ribbon indicators. There's also going to be a link to the free Madrid ribbon indicator in the description of this video as well. And both of these ribbons are very similar to each other. However, in our opinion, the Annie's ribbon is better than the Madrid ribbon in our opinion. However, if you prefer the Madrid ribbon, then you can utilize it in the same way as this. It's just the Annie's ribbon has a few more subtle features that make it easier to use in our opinion than the Madrid ribbon. So the idea behind using the ribbon indicator with the daily key levels indicator is you're looking for confirmation of bullish or bearish entries. So you are looking for the ribbon indicator to be also giving you a bearish indication when you are also seeing a close up below a main key level, which is the bearish indication from this indicator. So when those two line up, then you have a more powerful confirmation of a bearish trade. However, when they do not line up, such is the case where you will have a bearish entry signal with the daily key levels indicator, and then you either have a mixed signal or the opposite signal with the ribbon indicator, then you would want to avoid taking that trade. And the same thing would work on an opposite trade. If you have a bullish trade being indicated by a close above a main key level, yet the ribbon indicator is either giving you a mixed signal with no clear trend, or it is giving you the opposite, a bearish trend, then you would want to avoid that bullish trade. Okay, so on this opening 9:30 a.m. candle here, we have a bearish alert on that candle. And even though this ribbon indicator was green here in the pre-market, as you can see, it was kind of chopping back and forth. On this opening candle here, it does turn all red. So all of the moving averages in this ribbon are red. The two yellow ones here are for purposes of highlighting two specific moving averages that are very important within this ribbon. And as you can see, this candle closes below both of those yellow moving averages, and all of the ribbon is red on the close of this candle. So that's giving us an additional confirmation here of this bearish entry. So on this bearish entry, if you're trading shares, then that would be shorting SPY. However, all of our charts today, we're going to talk about options only, but just do keep in mind that obviously, unlike SPX, where you have to trade options because there is no alternative, with SPY, if you prefer trading shares, then you would still use the same stop losses that we'll be discussing. It's just you'd be trading shares, and in the case of a bearish trade, you would be shorting SPY. In the case of utilizing options, then you're going to be buying put options if you're going to be using this for our daily key levels strategy that we outline. And then with that in mind, there are always going to be 3 different option strikes that you can utilize on any bullish or bearish trade entry. There's going to be a standard play, which is going to be an at-the-money option, which is the closest strike to the level that you're basing the trade on. And then there's going to be two other alternative strikes that you can use that are going to be out of the money strikes, which will show you how you determine those right now. So as stated, the standard play is going to be the option strike closest to the level that you are basing the trade on. So in this particular trade, this is a bearish trade off the bull bear KPL level, which is 656.28 for today. So the closest strike on SPY for the Friday, March 20th session is going to be the 656 put. Now you could either use the Friday expiration, which is the 0 DTE, which we'll be outlining today. The other alternative, when you have a symbol such as SPY that has expirations every day of the week that it's open for trading, is that you could also consider using the 1 DTE option if that is your preference. Everything we'll be looking at today will be 0 DTE options, so just keep that in mind when we're going through all of these charts. Okay, so in this particular case, we are looking for the close of the candle on this 9:30 a.m. opening candle before making the decision on entering the position. Now, as far as out of the money strikes, how you would determine that on this particular trade is you look at the level that you're taking the trade from and the direction of the trade, which in this case is down since it's a bearish trade. And when you look to the first midpoint level in the direction of the trade, the first midpoint level below the level we're taking the trade off of, and that is this midpoint level here. 655.16 for the mid BBKPL S1. So the closest strike to that is going to be the 655 strike, so that would be the 655 put as our alternative out of the money strike on this particular trade. The furthest out of the money, the third option strike that you would have to consider with this particular trade would be the same process, except you look for one full level below the level that you are basing the trade off of. So in this case, the bull bear KPL, one full level below in the direction of the trade is the S1 level 654.05. So that is going to be the 654 put. Now on the close of the candle here, we have the ask price on just the standard play. We're not going to look at every single option play because we're going to go through multiple charts today and look at 5 different symbols. So we're just going to look at the standard play. So the standard play is the 656 put. The ask price on the close of the 9:30 a.m. candle, which closes at 9:32 on this 2-minute chart, is 259. We're going to be looking at 10 lot trades on utilizing this strategy. You do not have to use 10 lot trades. However, keep in mind that on SPY, a 10 lot SPY is going to be similar to trading a 1 lot on SPX, because SPY trades approximately at the 1/10 the value of SPX. So generally speaking, although there'll be some days where it won't be exactly 1/10, generally speaking, most of the time, SPY options will be trading at approximately 1/10 of the same option on the regular SPX CBOE index. All right, so 10 puts at $2.59 is going to be for every option $259. So if you're not familiar with how options work, you basically multiply the cost of the option times 100, and that is going to be your cost for one option. So the cost of one of these puts is $259. So the cost of 10 is 10 times that, $2,590. Now with this indicator, as mentioned earlier on in the video, there are 2 different types of trades that you can take. One is a scalp trade, the other is a regular trade. On scalp trades, you're just looking for a one level move in your favor for exiting the trade. So a one level move in your favor, how that is determined for your exit is you take the level that you're basing the trade on, in this case the bull bear KPL, the direction that you're trading, in this case down since it's the bearish trade, and you look one full level down, that's the S1 level 654.05. So when it touches that level, or on the candle close after a touch of that level, that's simply up to the trader whether they want to base their exits either on a touch of the level in question or on the candle close of the level in question. Sometimes the candle close will be to your favor and it will either close below in the case of a bearish trade or close above in the case of a bullish trade. Sometimes in the case of this, like it is here, it will back off of it after touching it. So whether you want to do it on an exact exit on an exact touch or on a candle close is up to the individual trader. However, generally it's best to consistently do one or the other once you've decided which is better for you. Either just getting out on touches of levels or going ahead and getting out on the candle close after a touch of a level. As you can see here at 9:52 a.m., then we have an hit of the S1 here, then it slightly backs off, and that is your one level move in your favor for a scalp only trade. So whether you're trading options or you're trading shares, this would be your exit on a scalp only trade. For regular trades, there are two minimum thresholds. One is a 1.5 level move threshold in your favor. That is going to be the minimum required threshold for a regular trade. And then the 2 level move in your favor is considered the ideal minimum move threshold on a regular trade. So here at 10 a.m., we have a hit of the mid S1, S2 level. That is the 1.5 level move in your favor. Again, that's from taking the level that you're basing the trade on, and you're looking 1.5 levels in the direction of the trade, in this case down. So that's one level here. Next midpoint level down is 1.5 levels, mid S1, S2, 652.94. Now here on the 10:12 a.m. candle, we have a hit of the S2. So on a regular trade, the 2 level move in your favor is considered the ideal minimum move. And here on the 10:12 a.m. candle, we have a hit of the S2 level, and that again, using the same process, here is one level, 1.5 levels, and 2 levels. Now, one of the differences between a scalp trade and a regular trade is that once a regular trade either hits your minimum required 1.5 level move or your ideal minimum 2 level move, you have several different options as to what to do at that point. The difference between that and a scalp trade is on a scalp trade, you're looking for a quick in and out. You're looking for a one level move in your favor, and then you're exiting the trade no matter, in the case of stocks and ETFs, no matter how many shares you're trading or no matter how many option contracts you're trading, you're exiting all of your position on a one level move in your favor. However, on a regular trade, once the regular trade has moved either the minimum 1.5 level move in your favor or the ideal minimum 2 level move in your favor, then you have several different options as to what to do at that point. One of those options is to not exit any of your position and simply adjust your stop loss to either break even or break even plus a minimum profit buffer on top of break even. So in this case, this bearish trade is off of the bull bear KPL. As we mentioned at the start of the video, the QL level above the level you're taking the trade on is a tight stop loss on the entry of a trade, and on bearish trades from any main key level, the first midpoint level above is going to be your standard stop loss. So as we have lined out here, the standard stop loss is this midpoint level here, or if you're using a tight stop loss, it is this level here, the QL above, on this bearish trade from the bull bear KPL. However, when you're adjusting your stop loss on a regular trade, what you are doing at that point is you're not, in the case of options, what you're doing is you're changing your stop loss from a level-based stop loss to a price of the option, or specifically the price that you paid for the option stop loss. So on a regular trade, when it hits either one of these levels here, if you are going to be adjusting your stop loss, then you are adjusting it to break even, which in this case what you paid was $2.59. So you would at least change your stop loss at that point to $2.59. Or you could add a small profit buffer on top of that if you were so inclined to do so. So if you added, say, 11 cents on top of that, then it would be $2.70. If you wanted to add, say, 10%, that would be 25 cents on top of that. And you could basically round that up to $2.85 since we're starting at $2.59, just to make it easy. When you're adjusting stop losses on these types of trades, you want to keep things relatively simple in your head as far as what you're going to do once price gets there, so you're not fumbling around. So if you're going to add, you either simply just make the stop loss break even, which is the price you paid, which is simple enough, or if you're going to add a profit buffer, just make it easy on yourself. And in the case of this particular trade where we had 259, if you were just going to add 10%, that would be roughly, a quarter. So you could just add a quarter and round it up to 285. The other option, one of the other options that you have on a regular trade is to simply go ahead and exit your entire position. So instead of adjusting the stop loss to break even or better, then you can instead, like the scalp trade, instead just go ahead and exit the trade 100%. The third option that you can do for trading options is only going to apply if you were trading multiple options, specifically 3 or more options. And what this would be exiting at either the 1.5 level or 2 level hit in your favor. Somewhere between 60% to 90% of your option contracts, you'll be closing those out, locking in the profit of those by closing them out. And then on your remaining contracts that you have left over, those are your runner contracts. And then on your runners, you are at least adjusting the stop loss to break even, or break even plus a small profit buffer. If you're trading shares instead of options, then you would, at that point, you would be adjusting, if you're going to be doing any stop loss adjustment instead of exiting the position, then you're adjusting your stop loss to break even, which is the price you paid for the shares on the candle close. In this case, it would be shorting the shares. So you would, in that case of just using shares instead of options, then you move your stop loss on the short sell to the price that the short sell trade was executed at. Okay. Then the idea with the regular trade from that point on, if you have either just adjusted your stop loss, or if you have scaled out 60 to 90% and you have adjusted your stop loss or remaining runners, the idea there is that you want to look for continuation of the trend in your favor. And as the move continues to trend in your favor, once it hits either an additional midpoint level, main level, or one of these contextual levels that are in the direction of the trend after the minimum threshold 1.50 or 2.0 level move has been met, then those additional level hits become additional waypoints for decision making as to what you're going to do with your entire position that you have left. Either the same options apply, so you're either exiting the entire position at a further level hit in your favor, or you're further adjusting your stop loss, adding additional profit buffer, or if you're trading remaining runners, then you can exit some of your remaining runners or all of your remaining runners. If you're just exiting a partial amount of remaining runners, then you could further adjust your stop loss if you would like to by adding additional profit buffer on whatever remaining runners there are left. And then as price continues to move in your favor to continuation of the trend to other additional key levels, then you can make the same decision at each of those waypoints that are further in your favor. Okay, so we're going to look at the two-level move here. On the two-level move, we have the bid price on this 10:12 a.m. candle, and that is $4.90. So that is going to be a profit of $2,310 on a 10 lot. As you can see here later, price did close below the pre-market low on a surge again. As you can see, there was a brief attempt here uh, with the ribbon. However, as you can see here, there was only a brief time where this ribbon did turn green. We still have either exited our trades here, or we just have our stop loss changed to break even at this point. So in this case, we're still in the trade. It is not whipsawed back up to the bull bear key price level and taking us out of our stop loss. We're still in the trade and we're looking for additional level moves in our favor. And as you can see here, price starts dropping off again here once it lost the pre-market low again here after this chop. And then we finally have a move down at 2:20 p.m. to mid S2, S3 here on this hit on this candle here. At that point, the bid on the close of that candle is 631. So now on a 10 lot, we have a profit of 3,720. Now in today's session, we're not going to go through the different scaling out methodologies for each different trade and show what the profit would have been. You can simply do that on your own by saying if you were trading a 10 lot and you would have closed out 6 or 7 or 8 or 9, because that all of those are between 60 and 90%, then you can work that out for yourself mathematically as to what the remaining profits would have been on remaining runners as we move through each of these different level moves in our favor. Okay, so here at the 3:10 p.m. we have a hit right here. As you can see, it did back off a little bit after hitting it. It did wick through it a little bit on this candle. However, on the 3:10 p.m. candle, we have a hit of the, and I apologize for this typo here. This shouldn't say mid S3. It just should say S3. So my apologies for that. So this is a hit of the S3 level, and that is a 3-level move in your favor. So again, we have 1 level, 1.5 levels, 2 levels, 2.5 levels, now a 3-level move in your favor. The 3:10 p.m. bid is $8.49, and now we have a total profit of $5,900 on the full 10 lot position. Here at 3:36, we have a hit of the mid S3, S4 level, and that is occurring at 3:36, and that is basically 24 minutes to go in the overall RTH session. One thing you want to keep in mind with SPY options that unlike SPX options, SPY options still trade through 4:15 p.m. whereas SPX options have a hard expiration at 4 p.m. With SPY options, you do have an additional 15 minutes available with most brokers that you can still exit out your position. But at this point, it is very late in the session. There's only 24 minutes to go in the general RTH session, which closes at 4. And then you have that extended 15-minute period afterward to 4:15, in which if you're trading options that you can also exit. However, just do keep in mind that the liquidity of options between after 4 p.m. and before the 4:15 cutoff is going to be a lot less. So it's generally, it really just depends on how many option contracts you're trading. Some people trade 1 or 2. Some people just trade somewhere between 3 and 5. Other people trade 10 lots. Some people trade 20 lots. Some people trade 50 and 100 lots. So everyone's account size is different. Everyone's risk profile is different. But you just have to keep in mind, if you are trading large amounts of lots, that generally, even though SPY is a very liquid as far as options, that the liquidity is going to be much less in that right after 4 to 4:15 window than it's going to be in the regular RTH session that ends at 4 p.m. So if you are trading, just keep that if you are trading options, just keep in mind, especially if you're trading 0 DTE versus 1 DTE, that the liquidity is going to be less right after the 4 p.m. regular RTH session close in that 15-minute window. So if you want to be more assured of being able to get out, especially if you have a large lot size that you need to move, it's generally better to just go ahead and exit those before 4 p.m. hits. Okay, so on this 3:36 p.m. hit here, you can see after that we did get a reversal back through the leading back up to the 4 p.m., which did continue on. This had something to do with news coming out from President Trump regarding the war, and that he was possibly going to lighten up on the situation. Uh, and so at that point, some traders were short covering there going into the weekend, and that's why we had this move up, which did continue throughout the rest of the post-market extended session. So as you can see here, though, we did basically get a stopping point and reversal here on this mid S3 S4. At this point, at the mid S3 S4 hit on the 336 candle is $10.87, and that is a profit of $8,280 on the 10 lot. Now we'll move on to the QQQ chart. Okay, the rest of the charts, we're not going to spend as much time as we did on the SPY chart. We're just going to run through these last four here a lot quicker. As you can see, we still have the same ribbon up here using to help confirm the entries. We have the 9:30 a.m. BBKPL bearish alert here. We have the entire ribbon turning red on the close of this 9:30 a.m. candle. And so we have confirmation from the ribbon indicator on this bearish close below the BBKPL on the 9:30 a.m. candle. Same process as far as the option strikes. We're looking below. We have the standard play closest to this. That is going to be, in this case, the 591 put, because that is the closest to 590.93, the bull bear KPL price. And then doing out of the monies, you'd look to the first midpoint level below or the first full level below to get your alternatives if you prefer to do a out of the money strike. 9:54 a.m. Here we have a hit of the 1.50 level move here. Back here, though, there wasn't enough room to put the another box here without interfering with this, so we just kind of ran out of room. Scalp only trade is going to be on the touch of this S1 level here. So if you were doing a scalp only trade, this is where you would have exited on a scalp only here on the S1 level. Here is the 1.5 level move here. That's the minimum threshold again. Here at 958, we have a 2-level move. That's the minimum ideal move, the 2-level move of the S2 hit. Again, 1 level, 1.5, 2 levels. The price on the ask on the 9:30 a.m. candle close on the 591 puts for QQQ or $3.53. That's going to be $353 per option. So on a 10 lot, that's $3,530. On this 9:58 a.m. hit, we have the bid on the close of $5.33. As you can see in this particular case, it did wick through it, but it did close right at the level in this particular instance. So with the bid being $5.33, now that is a profit of $1,800 on a 10 lot. Here at 1:36 p.m., we get a hit of the mid S2, S3 level. That is now a 2.5 level move in your favor. The bid price on the candle close is $7.27. So now on a 10 lot, the total profit on the 10 lot is $3,740. Here at 2:40 p.m. on this candle here, we have a hit of the S3 level, so that is a 3-level move in our favor here on the 2:40 p.m. The bid price on the candle close of that is $9.18. That's now a profit of $5,650 on a 10 lot. Here, much like SPY, we bottomed out at mid S3, S4 before the Trump news came out, and we had this move back up to YDL and PML in the extended session between 5 and 5:30 here. So at 3:36, we have on this close of this candle here, as you can see in this case, this candle closed through it and closed below it. So again, like we talked about earlier, that either decide if you're using this indicator with this particular strategy that you're either going to do your adjustments or exiting on the actual touch hit of the level, or that you're just going to do it on the candle close. For me personally, I find the candle close to be easier. Some people may just find that the touch hit of the level is easier for them. So here on this candle on the bid on the close, $11.98. So on a 10 lot, that is a profit of $8,450. Now we'll move on to the AMD chart. Now, before we do that, just quickly again, this was a BBKPL bearish trade. So our stop losses were the same on SPY. So first midpoint above, the bull bear KPL is the standard, and the tight stop loss, if you prefer that, is the QL above. Okay, so here we have AMD. This is a very popular tech stock. A lot of people day trade. As you can see here, we have a different situation here on this particular symbol. We do have the 9:30 a.m. BBKPL bearish alert here. However, as you can see, the ribbon is green. So this is a no trade as we're getting conflicting signals here. You can see this was a very long wick on both sides of this candle. So this was a fairly extended candle here. We have the body in between. We have a wick above, which went all the way above YDH, and we have this wick below, which almost went to S1, and then it closed here, which would have been an acceptable range for a BBKPL based bearish trade off of this level. However, since we're using the ribbon indicator to confirm our entries on this, it is telling us no trade on here because we're getting conflicting signals where this ribbon is green, and even though it did close below these two yellow lines, the ribbon is still green here. And as you can see, the ribbon continues to be green here until we get to the 9:50 a.m. candle here. So this candle is also within acceptable range for a bull bear key price level bearish trade, and that is this candle here, this 9:50 a.m. candle. And as you can see now, it is not only closed below the two thick yellow lines of the ribbon here, but the entire ribbon is now green. So this is your entry signal for a bearish trade off of this level. Here is your stop loss on a BBKPL bearish trade. Again, first midpoint above. Tight stop loss is this level here, the QL above. In this case, the BBKPL for AMD is 204.53. So that is going to be the 205 put, since it's slightly over the 204.50, which would be the mid-bar between the 204 and the 205 strike. Okay, so the 205 puts here on this 9:50 a.m. candle close are $2.81. That's going to be $281 for each put. A total for 10 puts, $2,810. As you can see here at the 9:58 a.m. candle, we have a hit of the S1 level. As you can see, it closed below it after touching it. So that is your scalp only exit on if you're only doing a scalp only trade. Here on the 10:08 a.m. candle here, you can see it did touch, it wicked through it, but then closed slightly above the mid S1, S2 level, which is the 1.5 minimum threshold move for a regular trade. And that is your minimum threshold for that type of trade. Here at the 10:22 a.m. candle, we have a hit of the S2. Again, this one, after touching it, did close below it. So we have now a two-level move in our favor, which is the minimum ideal move. And this is the 10:22 a.m. candle bid price on the candle close, $4.70. So that is now a profit of $1,890 on a 10 lot. Here at 256, we finally get a hit of the mid S2, S3. That is a 2.5 level move in your favor here. And on the 2:56 p.m. candle, we have a bid price of $6.30. So that is now a profit of $3,490 on a 10 lot. Next, we'll look at the NVIDIA chart. Okay, so now we're on the NVIDIA chart. We do have a 9:30 a.m. BBKPL bearish alert. It is within the acceptable range, which is why we're seeing the label here for a bearish trade off of the bull bear KPL. We check our ribbon here, and this is the candle right here, this candle here. It is still barely within the range of the acceptable range. And that is your confirmation here, because with this ribbon indicator, because it's confirming the bearish trend here. As you can see on this candle, the entire ribbon is now red, and it is also closed below both of these thick yellow lines within the ribbon. Today's BBKPL for the on the 3/20/26 session for NVIDIA 178.19. So on this bearish trade, that is going to be the 178 put. Price for this put is $1.31. Note again, this is a 0 DTE with a Friday expiration. So NVIDIA and stocks in general do not have expirations every day like QQQ and SPY do. So on Fridays, that happens to be 0 DTE options for most stocks. On some of your stocks that have not really many options. Sometimes it's just they have the third Friday in every month as being the expiration, as opposed to each Friday in the month. But on larger stocks and most stocks that have high liquidity that are also optional, typically that's going to be on Friday expirations, where they might have an expiration once a week. Some stocks have multiple expirations during the week. Some have Monday, Wednesday, Friday. It just simply varies depending upon the stock. Okay, so 10 at $1.31 is going to be $131 for one option, so that's going to be $1,310 for 10 options. As you can see here on the very next candle, we did get a hit of the S1, that is your one level scalp. So if you're only doing a scalp, this would be your exit, whether you're trading shares or you're trading options. 9:58 a.m. we have a hit of the mid S1, S2 level. That's your 1.5 level move here on the hit of the mid S1, S2. At 10 a.m. we have a hit of the S2 level. That's going to be a 2-level move in your favor here. On the 10 a.m. hit, on the candle close, we have $2.08 as the bid. So on a 10 lot, that's going to be a profit of $698 total profit on the 10 lot. At 2:20 p.m., we have a hit of the mid S2, S3 level. So on regular trade, that's a 2.5 level move. On the 2:20 p.m. hit on the candle close, the bid $3.10. So that is now a profit of $1,790 on a 10 lot. At 3:06, we have a hit. It did back off of after hitting it, but it did hit it on this particular candle. So that is a hit of the S3, now a 3-level move in your favor on a regular trade. 3:06, candle close bid $4.30. That is now a profit of $2,990 on a 10 lot. And then here at 3:38 p.m., we finally have a hit of the mid S3, S4 level. That is now a 3.5 level move on a regular trade. And the bid on the close of that candle, as you can see, it did back off after hitting it, is $5.35 on the candle close. So that is a profit of $4,040 on a 10 lot. Next, we will move and look at the Tesla chart. Okay, so now we'll look at the Tesla chart. Starting off here, we have the 9:30 a.m. opening candle here, which is this long candle here. It does close below the bull bear KPL. However, we have no label here for the 9:30 opening candle BBKPL bearish, and that is because this is outside of the acceptable range, so the acceptable range filter keeps the label from coming up. So this is not a trade off of the bull bear KPL on this 9:30 a.m. opening candle. As you can see, the candle does close below, and we also have the red ribbon, and we also have this candle closing below the two thicker moving averages of the ribbon as well. So what this candle is, though, is a bearish trade off of the S1 level, because it still is within the acceptable range of the S1 level. As it is closing here slightly above the midpoint, so that is more like in the 46 to 48% range. The acceptable range filter, the max setting, is the default setting, and that is 85%. So 85% or less is generally what you want to be looking for as far as a close below a specific level or a close above a specific level, as far as being within the acceptable range. If it is above 85%, then it's going to be outside the acceptable range. All right, so with that, you have a bearish trade off of the S1 because this is closing below S1. The ribbon is also red, completely red, and it is closing below the two thicker lines as we pointed out as well. So on this 9:30 a.m. opening candle trade, then no trade off the BBKPL, however, is bearish trade off of the S1 level. The standard stop loss for a bearish trade off the S1 level, first midpoint above, mid BBKPL S1, this level here. Alternatively, the tight stop loss is the QL above that level. So you simply go and turn that on in the user control panel, QL above S1, if that was your preference. The 377 is the price to the level. Because of all the stock splits that Tesla has gone through, there is no 377 put. The closest strike to that is the 377.50 put. In this case, on this Friday session, it is a 0 DTE option for a Friday expiration date for 320 as well, as Tesla has options that expire every Friday. The ask price on the 9:30 a.m. opening candle, the 377.50 put, $4.40. So that is going to be $440 per put option. So on a 10 lot, that's $4,400. As you can see here, 9:34 a.m. we have an S2 hit. That is your scalp trade. So if you're just trading Tesla shares, or you have your option and you just want your options and you're just wanting to do a scalp exit, the S2 hit on this trade is your scalp only exit because it is a one level move in your favor on a bearish trade from S1 down to S2. 9:58 a.m. hits mid S1, S2. That is now a 1.5 level move in your favor from S1 on this bearish trade. So that is your regular trade, 1.5 level move minimum threshold. 2:48 p.m. it hits S3. My apologies here. It should just say S3. So I made a typo here. This is regular trade, 2-level move, ideal move. As you can see, this candle touched, wicked through it, and then closed back above it. 2:48 p.m. bid price on the candle closed 9:15. So on a 10 lot, that's $4,750 profit total on a 10 lot. 3:36 p.m. it bottoms out here at mid S3, S4, right before the Trump news came out. 2.50 level move in your favor. So again, we're going from S1, that's 1 level, 1.5 levels, 2 levels, 2.5 levels. Bid price in the candle close of the 336 candle, $12.70. That's a profit of $8,300 on the 10 lot. Okay, so I hope you can see how the ribbon indicator helps confirm entries and when used in conjunction with this indicator, and has also kept us out of some entries when we have conflicting signals. If you do have an interest in purchasing this indicator, the new stocks ETFs daily key levels indicator, we do have a very special, highly discounted, more than normal promo code going on now for this indicator for its initial release. You can email us at daytradinggps@gmail.com to request the discount promo code, and we will send it to you. If you did enjoy this video, please hit the like button, as that helps us with the YouTube algorithm, so we'd appreciate it if you would do that. If you'd like to see other videos on this channel, whether they're about the stocks ETFs daily key levels indicator or one of our other daily key levels indicators for SPX, NASDAQ, NDX, Forex, and cryptocurrencies, or the one for futures and CFDs, then please hit the subscribe button to be notified when we post new videos. Also, as mentioned at the beginning of this video, if you would like to know more about this indicator and all of the different features, we did not go into those today. It does have some special features for low float and low float parabolic microcap and small cap stocks, which is an automated Fibonacci extension when price happens to touch either the R10 level or the S10 level during a session. For those types of stocks that are in the news that are small cap or micro cap and are the low float kind that a lot of people talk about on a daily basis in various different day trading chat rooms. This indicator also has some special features for those kinds of stocks. Again, as mentioned in the beginning of this video, just simply look in the description of this video. You will see a link to the full features and setup video for this indicator, which again is a very long video. However, if you click on that link and look in the description of that video, it is broken up into chapters, so you can simply go to the specific chapter or chapters that you want to look at, and you don't have to view the entire video. All right, so thank you for taking your time for watching this video today and supporting our channel. We appreciate that very much, and we wish you much prosperity in all your future trading. Okay, so for those of you who might be wondering, well, how is this working for people that have purchased the daily key levels indicators? You can go to daytradinggps.com and look at the user reviews and feedback. We've just taken some of them here and highlighted parts of them, but we invite you to go to daytradinggps.com and look at the reviews and trader feedback on our various daily key levels indicators, including the SPX daily key levels indicator. Thank you. In return for you taking your time to watch this video today, you can email us at daytradinggps@gmail.com to request a discount promo code, and we will send you a promo code for a substantial discount on your purchase of the indicator. To purchase the stocks ETFs Daily Key Levels V 3.0 indicator, simply go to the link that you see on the screen now, which is wap.com/stocks-ETFs. This link will also be in the pinned comment of this video and also in the description of this video. Thank you.